Hello everyone and welcome. I'd first of all like to take this time to thank you all for registering for the conference and hope you all enjoyed it. It was a resounding success for IndexUniverse. My name is Paul Bayaki and I'm part of the team behind the development of the Etf Analytics product we'll be showing you today. For 12 years, IndexUniverse has brought you coverage and insight on everything dealing with ETFs. I'm honored to say that the last couple of years, we've harnessed that experience and knowledge to create the most important research tool for the growing ETF industry. Now, IndexUniverse has established itself as the world's leading authority on ETFs through a number of venues. Our global publications include the Journal of Indexes and the award-winning ETF report, which has recently been relaunched and rebranded. Our annual conferences, which you all seem to be familiar with. Our ETF reference data, including fund flows, compliance, and risk advisory services, as well as our groundbreaking ETF classification system. And last, but certainly not least, our flagship Etf Analytics service, an institutional caliber research tool, which I'm happy to show you today. Now, as many of you well know, the ETF industry is undergoing massive growth. There are now over 1,400 ETFs offering a wide array of strategies from U.S. large cap value to 130/30 strategies. The problem is it's too hard to evaluate them all, so people shortcut with bad approaches to analyzing them. Some people go by issuer, others go by using screens based on simple stats like volume. The worst choice, of course, is to go purely on historical performance, like some well-known system designed for analyzing mutual funds. But really, many people tend to miss out on great opportunities because the menu of choices is simply overwhelming. The key is finding a way to quickly identify the best funds for your desired exposures and, most importantly, to understand those exposures. So we built IndexUniverse's Etf Analytics. We noted huge gaps out there with the available research services. We chose to develop our analytics service on the core pillars of the philosophy that you see here. You need solid, reliable data. I know it seems obvious, but it's actually difficult to execute. You'd be shocked to see how immature ETF data is compared to other market data. Over the past 2 years, we've corrected thousands of NAV data points from top-tier data suppliers, as well as index levels, even going to the point of contacting every ETF issuer in the industry, and in many instances, correcting benchmark levels on behalf of index providers. Classification is another huge issue. Again, this may seem obvious, but it's seldom done well. Our ETF classification system breaks down the entire space into meaningful, multidimensional tiers going from super broad to super narrow with a consistent, rules-based approach that makes sense and is also transparent. The classification system is not only key to how you navigate the space, it's the roadmap that lets you analyze and compare ETFs on an apples-to-apples basis. What you need is a system that allows you to evaluate ETFs individually, but also at the peer group level with what we like to call segment reports. There are 2 levels of analysis. You need to analyze the ETF level, but you also need to look at the underlying holdings as well. There's one final core component that we took into mind when developing our tool. It needs to save you time and allow for concise, digestible case when making recommendations to your clients. So ultimately, our goal was to solve a very simple question. What is the best ETF for me in every corner of the market? Now, it may seem obvious, again, but ultimately, similar ETFs are not created equal. As an example, look here at the performance of all ETFs tracking the long-term treasury market. Now, as you can see, zeros and EDV outperform their peers by a long shot. Zeros returned nearly 60%, while EDV returned 58%. Meanwhile, TLT and TLO lagged behind with returns of 40 and 38% respectively. So what drove this? Well, as you'll note in our reports, EDV and zeros load up on zero coupon strips maturing in 20 and 30 plus years, resulting in significantly higher interest rate sensitivity. As a result, when the yield curve flattened, EDV and zeros outperformed their peers. Instead of having to look at 4 different issuer websites, comb through 4 different fact sheets and prospectuses, Etf Analytics would have told you all of this and more in one concise report, saving you both time and effort. Looking ahead, it's not all about expense ratios, volumes, and prior performance. It's about matching your view of the market and your desired exposures to the right fund. Here's another example. With the environment we're in with zero interest rates, high dividend yield ETFs have never been more popular. HDV was the best performer in the segment with a return over 16%, while PEY was the laggard in the segment with a return of just under 10%. Now, there's a myriad of ways each fund tries to target dividend stocks, whether it's the requirement that dividends have increased for the past 25 years, or they simply have the highest yields in the market, or they use fundamental analysis in parallel with dividend screens. The exposures will vary greatly, and that's the key. In other words, don't always pick the largest or most liquid fund, but rather the fund that suits your needs and your intended exposures. So what is ETF Analytics, and what does it do? Well, ultimately, it is enabling you to save time and ultimately focus on the core of your business. What we do is identify the best funds in any area of the market using objective criteria designed specifically for ETFs, understand how well a fund captures your intended exposures, understand an exotic fund structure, tax treatment, risks, and other due diligence points, find investment opportunities you might have missed from the myriad of ETFs, over 1,400 currently, and finally monitor breaking news on ETF launches, closures, regulatory actions, and more. So with that, what I'd like to do is show you the product we've been discussing. So what you're looking at now is the Etf Analytics homepage, and I'm going to let that load up. So what you see here is once you log into our system, the beginning phases of your search. And ultimately, our classification system is the foundation on which our product is built. With competing products like Morningstar, for example, if you were to search for diversified emerging markets ETFs, you'd get things like VWO and EEM, which are certainly diversified emerging markets ETFs, but you'd also get things like EGPT, the Egypt Fund, or EIS, the Israel Fund. And ultimately, as an advisor, what you want to do is compare the exposure and risks of diversified emerging markets ETFs to each other, and more importantly, to a neutral arbiter. In addition, you have examples like Europe. You may get broad European funds, but you also would get things like a Germany ETF or a German small cap ETF, and ultimately that is not what you're looking for. If you're looking for broad European exposure, you want the funds that'll get you there. So our ETF screener allows you to do that, and I'm going to show you how. So first, what I'm going to do is I'm going to select the equity asset class, and I'm going to use emerging markets, broad market funds as my example because it's a good way for me to illustrate the different features of our product. So I've now scrolled down by geography to emerging markets, and what you can see here is the number of ETFs covered is going to fall as I get more and more specific. These funds are size and style funds, so once I've done that, we're down to 27 ETFs. Finally, I'm going to go to total market, and as you can see, there are a much shorter list of emerging markets total market funds. I want the broad-based portfolios, not focusing on growth or value. And now what you can see is there are 18 ETFs covering the emerging markets total market space. So as I scroll down, I can see all of the ETFs that are in that marketplace, and I've got VWO. If I were to click on VWO, it would open up in a new tab, and it would bring me to the individual fund report. Now, what I've landed on is the overview tab of our fund report. You can see that the fund report is broken down into three sections: efficiency, tradability, and fit, in addition to the overview tab. Efficiency deals with how well the fund does delivering on its core promise to investors. And ultimately, for a passive ETF, that means delivering its index's return net of fees. Tradability deals with exactly what you would expect it to, how easy and cheap it is to trade an ETF. And then finally, there's the fit section. And what fit does is compare every ETF in that segment to what we feel is the best neutral benchmark in that segment, and tells you how each fund differs from a neutral look at the market, so you can determine how that fund suits your needs or your exposure needs. So the overview section is aimed at being a 40,000-foot view of the fund. Up in the top right, you see some very basic data: who issued the fund, when was it launched, what is the legal structure, the annual expense ratio, how many assets under management, and as you scroll down, you've got some basic portfolio data, weighted average market cap, price to earnings, price to book, and dividend yield. And then you've also got some information about the index. What is the index that it tracks? How is that index weighted? How is that index selected? And then finally, the name of the segment benchmark, which we've chosen to measure all of the funds in this segment against. We've provided you a link to the fund's homepage as well as the index's homepage so that you can do a deeper dive into the fund's methodology as well as the index methodology if you so choose. Our analyst team has also provided you here with some alternative choices within the segment. Other ETFs that target the same segment and take a similar tack. EEM is one that comes to mind. SCHE is the Schwab product. GMM is the Spider product. DBEM is the currency hedged portfolio. Now, we have a prolific network of websites that includes IndexUniverse.com, IndexUniverse.eu, and our sister site, Hard Assets Investor, which we feed news stories from in here for you, the advisor, to be able to keep abreast on any news pertaining not only to the fund, but the segment in question. As you scroll down, you'll also see some information about the portfolio's exposure. You can see all of the countries, the top 10 countries that the fund has exposure to, and when you click View All, you'll get a pop-up window that shows you each individual country the fund has exposure to and in what proportion. You've also got the ability to see the top 10 sectors the fund has exposure to, and in the case of a sector fund, say basic materials, instead of showing you that it was 100% in basic materials, we would drill down to the industry level so you could see that that fund was 15% in commodities, chemicals, or 15% in integrated metals and mining, for example. Then you get the top 10 holdings of the fund with the ability to click View All and see all of the fund's holdings. This performance chart will go back as far as the fund's history allows. Now, you'll also notice some commentary here from our analyst team. What we've done for every fund in the overview section is try to give you a quick 40,000-foot view of what the fund does, how it goes about providing you that exposure, how liquid and cheap it is relative to competing funds, and a brief overview of what to expect in terms of exposure, cost, and liquidity. Now, moving on to the efficiency section of the report, this is where, as I said earlier, we measure how well the fund does delivering on its core promise to investors. So the score here, which you see as a 77, is measured by the historical tracking. So we run a regression of the fund against its underlying index, and we calculate the standard deviation and standard error of daily differences between the fund and its underlying index to measure the volatility of the fund compared to its index. But we've also provided you this intuitive measure of tracking, which is ultimately a snapshot of the past 2 years, looking at rolling one-year periods, how that fund's performance has differed from its underlying index. And in the case of VWO, you can see that the fund has tended to lag its index by 26 basis points over the past 2 years as measured by one-year holding periods. Now, that's 6 basis points more than you would expect given its 20 basis point expense ratio, but you can see here, based on the max upside and max downside over that time frame, it can vary greatly depending on when you enter the fund. And that matters because then you can be sure that the actual stated expense ratio is likely to be very different than what your true holding cost is. Another way we feel we can measure how well the fund does delivering on its core promise to investors is the likelihood that the fund is going to be around for the entirety of your investment horizon. So we developed this fund closure risk score, which goes from low to medium to high. And in order to calculate that, what we did was we went back through every fund closure historically, dug through the press releases, and determined why those funds closed. Then we built a multi-point quant-driven model which calculates the likelihood that a fund will close. And this fund, VWO, which has a massive asset base and high day-to-day liquidity, is scored as a low. Now, there is also an embedded measure of issuer culture which tries to take into account how likely an issuer is to close a fund. So in the case of Vanguard or iShares, even if they have a low asset fund, they're unlikely to close those funds, whereas other competing issuers, say PowerShares or Global X, have been known to close funds in the course of their business. Tradability, like I said before, deals with exactly what you would expect it to, how easy and cheap it is to trade a fund. And we go about measuring that in two levels. At the first level is on-screen or retail liquidity. So we provide you stats like average daily share and dollar volume, average spread on a percentage and dollar basis, but we realized in calculating these statistics that they vary because the ETF, unique to the asset class, has this creation and redemption mechanism that can lead to outlier volume days that really overstate the day-to-day liquidity of an ETF. So what we added was this median daily share and dollar volume figure to give you a better idea as to the distribution of daily liquidity of an ETF. If this median figure is significantly lower than the average dollar volume figure, you can be sure that you're probably going to face a market that's wider than the average spread would lead you to believe. And as such, you might have to take more care in going to that market and trying to execute an order. Now, we understand that institutions have different requirements when it comes to liquidity. So we partnered with Knight to develop this measure of block liquidity, which takes into account the cost that Knight charges their customers to trade 25,000 shares of an ETF. And the way we came up with that 25,000 share amount is because we felt that's the typical half creation unit size. Now, obviously, VWO has a 200,000 share creation unit, but that 25,000 share order size is typically a very difficult one for institutional market makers and liquidity providers to execute. So this goes from 1 to 5, 5 being the cheapest, 1 being the most expensive or most difficult, and gives you some insight as to how easy it is for institutions to trade those ETFs. Now, we've also added this underlying volume per unit measure, which takes a creation unit of the ETF, in this case 200,000 shares, unbundles it, if you will, into the underlying shares, and measures as a percentage of average daily volume what that creation unit size trade would represent. And this, as this number grows, here it's just 22 basis points. As it gets nearer and nearer to 1, 2, 3%, the likelihood that you're going to impact underlying prices increases, unless, of course, the ETF market is prolific enough to allow you to trade those types of trades in the marketplace for the ETF itself. Now, before I move along to FIT, I want to draw your attention to our scoring system in the top right. We've split our scoring system into two parts, the letter grade above the number grade. And the letter grade rolls up our efficiency and tradability score into one concise letter grade. The FIT score is a number grade, which goes from 0 to 100. And ultimately, the reason we did that is because we feel as if E&T, efficiency and tradability, are much more objective measures. The way a fund tracks its index, the liquidity an ETF has on a day-to-day basis is a very objective statistical measurement, whereas how well an ETF fits to a neutral benchmark, a cap-weighted, broad-based benchmark, is really the value is in the eye of the beholder. I like to use the example of SPLV. This is a fund that attracted nearly over $3 billion in assets almost overnight and has now attracted day-to-day liquidity that makes it very easy and cheap to trade, is very well managed, is reasonably priced, but because it only chooses the 100 lowest volatility stocks in the S&P 500 and weights them by volatility, it's a poor fit to a cap-weighted benchmark. And as an advisor, it's a much easier conversation to have to say, this fund is an A55 because it's very liquid, it's very well managed, it's reasonably priced, but it's a poor fit to a cap-weighted benchmark. And oh, by the way, that's why we like it. Whereas if we had blended all three scores into one letter grade, that fund might score a C, and that's a difficult conversation to have with your client. So moving into the FIT section, this is where we separate ourselves from our competitors. We feel as if this is where we arm you with all of the necessary information to allow you to choose the fund that best fits your exposure needs. So again, we've ran a regression this time of the fund against our neutral benchmark. In this case, we've chosen the MSCI Emerging Markets IMI Index. So what you see here is the R squared of that regression, the beta of that regression to give you an idea of the relative risk of the portfolio, any annualized alpha if statistically significant, and then some regime analysis, up beta and down beta, to see how the fund reacts on a relative basis in different market conditions. As you scroll down, you get an idea as to the size and scope of the portfolio relative to our benchmark, as well as the weighted average market cap, the comparison along the market cap spectrum, price to earnings, price to book, and dividend yield relative to our benchmark. Now, as you can see, VWO, because it used to track a less inclusive MSCI benchmark and is in the process of transitioning to a FTSE-based benchmark, had a significant bias to the top-tier companies in the marketplace because its index at the time covered a significantly smaller portion of the market than our benchmark. And as you can see, these firms at the bottom of the market cap spectrum is what give this fund a relatively large tilt compared to our benchmark. We also allow you to compare the fund's exposure on a sector-by-sector basis to our benchmark, and in the case of sector funds, on an industry-by-industry basis compared to our benchmark. So you can see which sectors of the economy this fund has a bias towards compared to our neutral benchmark. As you scroll down, you can see the geographic exposure compared to our benchmark as well, in addition to the regional and developed and emerging market split and how that compares to our neutral, broad-based, cap-weighted benchmark. You have the ability also to export any of these reports to a PDF, and that allows you to view these things offline, print them out for clients, or look at them when you're on the plane or the train. Now, each ETF that competes in a segment with other ETFs has what we call a segment report, and that's what you see here, the Emerging Markets Total Market Segment Report. This is where we provide context for each ETF and its peers. The Overview tab is where we give you a 40,000-foot view of the segment. Which are the cheapest funds? Which are the easiest to trade? Which are the funds that fit our definition of the market best? Which are the funds that take a more nuanced take on the segment? As you see on the right, you can see all of these funds are sorted by their overall score, and we've provided you a quick 2 to 5 word snapshot about the fund. Is it liquid? Is it cheap? What is the strategy? How does that differ from the market? And here we've provided you also some alternative ETF choices that are not in this segment. So Econ is the Dow Jones Emerging Markets Consumer Titans product from EG Shares, Emerging Markets Materials Fund, Emerging Markets Infrastructure. So these suggestions are merely alternative strategies that are similar, albeit different, than what you're looking at in this segment. As you scroll down, you've got performance history on all of the individual ETFs on the segment, dating back as far as they go. Once again, you can take this PDF and export it. You can take this report and export it to a PDF so that you can view it offline or show it to a client. The efficiency section deals with the same thing it did in the individual fund report, but again is aimed at being contextual. You can see the cost of each fund, and if there is 2 years of history on the fund, you can see its tracking differences on a rolling basis as I described in the individual fund report. You've got the structural differences among the funds, which all of these are open-end funds, and then of course the fund closure risk score, which is proprietary to IndexUniverse. Tradability is much the same as it was in the individual report, but what we've done is we've lined up all of these funds on a side-by-side basis. So if you were an institutional investor who required a tremendous amount of ETF-level liquidity, you could see that EEM and VWO are the funds that turn over the most creation units a day. Furthermore, you could scroll down to see which ETFs score best in our measurement of block liquidity, and you could easily eliminate ETFs that don't fit your needs. Finally, we get to the fit section. And again, because this is where we feel we add the most value, this is where you see the most information. We've got the regression statistics you saw in the individual fund report lined up against each other. So as you scroll down, you get an idea as to how each fund tracks our definition of the market, what the relative risk is, the average market cap, and the pertinent ratios. You also get an idea as to how big the portfolio is. And then finally, our Etf Analyst team has also provided you with some analysis and a 3 to 5 word description about the fund's exposure. In the case of BBRC, for example, big Mexico and South Africa exposure. Now, as you scroll down, we allow you to see at a top-line view what the benchmark's country exposure is and how that compares to each fund in the segment. So if you were looking to make an over or underweight bet on a certain country within the universe, you could see quickly which funds have large overweights or underweights to specific countries in our benchmark's universe. The same can be said for sectors. You've got a top-line view of the sector exposure of our benchmark, and then each individual fund's exposure with a key down at the bottom to tell you the magnitude of the over or underweighting. Finally, we provide you a top 10 holdings list for each of the funds in the segment, along with this pictograph, which is ultimately a Venn diagram aimed at giving you an idea how the size and scope of each fund compares to our benchmark. In the case of EEMV, you can see the fund's holdings is a significantly smaller universe than that covered by our benchmark, but all of the individual holdings in EEMV are included in our segment benchmark. Another useful tidbit here is to see how concentrated each fund is. So if you're looking for a more robust, more diversified, more balanced exposure, you can see which funds will provide that. And of course, if there are individual companies you want big exposure to or you want to avoid altogether, you can see in the top 10 holdings list which companies each fund has exposure to. Now, obviously, different asset classes have different analysis, and so we've fine-tuned the methodology for analyzing each asset class to reflect the relative statistics of each asset class. Here's an overview section of AGG, which is a total market U.S. bond fund, which, as you can see, has all of the different characteristics you can see in our individual report for equities. The difference is when you get to portfolio level data. Things like price to earnings and price to book, as well as weighted average market cap, have been replaced by things like duration, weighted average maturity, and yield to maturity. Now, we analyze efficiency and tradability much the same way as we did in equities, but once you get to the fit section, you can see that we've fine-tune the methodology to fit fixed income. We've ran the regression and produced the output here, but here you can see we've compared this fund against our neutral benchmark, which just so happens to be the same benchmark tracked by AGG, and we've compared it on a number of different portfolio risk levels: effective duration, key rate 2 and 10-year duration, yield to maturity, credit spread duration, concentration. And as you scroll down, where does the fund invest along the maturity spectrum? How does that compare to our neutral benchmark? What is the credit rating of the fund, and where along the credit spectrum does it invest, and how does that compare to our neutral benchmark? Again, in this case, we are providing you sectors of the bond market that this fund invests in and comparing it to the benchmark. So whereas you saw things like basic materials and energy, here you see things like treasuries and MBSs and agency debt, so that you can see which portions of the bond market this fund over or underweights relative to our neutral benchmark. Again, you can see how the fund's country-by-country exposure compares to that of our benchmark, as well as the currency exposure. So for a U.S. bond fund, this section of the report is of less use than it would be in an international currency hedged bond fund, for example. Now, moving along, another example of a report where we now have online is the commodity space. And certainly commodities are another beast altogether. So the portfolio data you see here has been fine-tuned to reflect the information relevant to commodities funds. And as you go over to the fit section, you'll see that we've taken different angles at analyzing commodities funds than you might be expecting. First, we've ran a regression, as you would expect, and as we've done with all other asset classes. We provide you the top 10 contracts in the portfolio, and then the sectors of the commodity space. DBC is a broad commodities fund, which gives you exposure to energy, agricultural commodities, as well as industrial and precious metals, and in the case of our production-weighted front-month benchmark, livestock. Furthermore, as you scroll down, you can get an idea as to how effective a fund's contango mitigation strategy, if it employs one, has been in diminishing the roll cost of the portfolio. And we compare that to a front-month production-weighted benchmark so that you can see just how well the fund has been doing at mitigating the impact of contango on the portfolio. Finally, as you scroll down, you can see how the term structure of each commodity covered by the fund looks currently, so that you can see how the impact of that curve structure will be on your returns. And ultimately, the goal is to provide you with as much information about the market and the exposure of the fund as possible so that you can match that to your needs. So with that, I'd like to just quickly go back into the presentation, which I showed you earlier. And ultimately, what you're seeing now is a comparison of our product to our competitors. And ultimately, most people are very familiar with Morningstar and S&P's mutual fund rating systems, but not necessarily all that familiar with how they approach the ETF market. Ultimately, we view ourselves as the only institutional caliber research tool designed specifically for ETFs. Unlike other systems, we focus on what matters for ETFs, efficiency, tradability, and fit, and package that up with insightful commentary with the broadest, deepest coverage available in the market. So what you see here is a side-by-side comparison. You can see Morningstar and S&P system were designed for mutual funds and adapted to fit ETFs. Our ratings are based on efficiency, tradability, and fit, whereas Morningstar's is based on past performance, S&P's based on their S&P equity analyst valuations. Our coverage is currently larger than 1,000 ETFs, whereas our competitors have 600 and 500 ETFs, respectively. Finally, the classification system, which allows for 250 individual segment reports for true peer comparison groups, whereas only Morningstar and S&P have broad categories like Europe stock, whereas we would drill down all the way to German small cap, for example. Finally, we provide you accurate portfolio holdings on equity, fixed income, commodities, and currency ETFs, as well as equity, fixed income, and specifically equity for S&P. Finally, we provide you segment reports, which are now over 250 strong compared to not a single segment report for either of our competitors. So the question you might be asking yourself is, what comes with Dtf Analytics? Well, you get access to over 1,000 fund reports, over 250 segment reports. As I showed you, exportable PDFs, both at the individual fund report level and at the segment report level. You get access to our rules-based ETF classification system, as well as all of the methodology documents detailing why we made the decisions we made and what the process is for classifying ETFs. You also get direct phone access to our analytics team so that if you have specific needs about portfolio design or risk levels, our analyst team can help you sort those out. We also give you access to monthly live calls with our analyst team, as well as subscription to our award-winning ETF Report magazine. The cost of the product is currently $2,000 per year with a monthly fee of $170 per month if you so choose. I have our sales staff, Brian Mora and Ray Kim, who are more than happy to provide you with any service you may need, as well as signing you up for the $2,000 subscription or getting you set up for an additional 2-week trial. And with that, I'd like to take a step back and see if any of our audience members have any questions. All right, so Paul, I think really the first question most people have is to go into the individual methodologies a little bit more. You're muted. Hello, Paul?
You're muted from the...
All right, sorry about that. We were having technical difficulties.
Well, I think
one of the first questions we had is to go into the individual methodologies a little bit more, particularly with the commodities methodology.
Okay, great. I'm going to go ahead and bring back up the reports I was going through. So I'm sharing my screen again, and as you can see, we've gotten to the landing page for DBC, and we're on the FIT score. And ultimately, the methodology for commodities is really aimed at providing you an insight as to how the fund's exposure compares to a production-weighted front-month strategy, which is our segment benchmark in this case, and then, of course, how the top 10 contracts of the portfolio look currently. As well, what we've done in this expected rate of decay table is give you an idea as to how effective the fund's contango mitigation or backwardation mitigation strategy has been compared to a front-month strategy. So in the case of DBC, you can see that the expected rate of decay for the portfolio is significantly lower than that of a front-month strategy. So all things considered, this fund strategy of picking contracts has been much more successful than a strategy using front-month only contracts. As well, our team has calculated the term structure for all of these individual commodities so that you can see the shape of the curve and which commodities specifically are likely to be impacted by the forces of contango or backwardation.
All right, I think that's basically it for the questions that we had. And of course, we want to emphasize that if any of you do have any questions or you want to look at any, reports on a deeper level, please feel free to contact us. You have access to the analyst line as well as direct access to Paul and the other analysts on the team. And thank you for joining the presentation today.
Thank you, Hugo, and thank you everyone for joining us. Like he said, just to repeat, Ray Kim and Brian Mora will be reaching out to you. The subscription is $2,000 per year, $170 per month, and if you'd like to get set up with a free trial and dig around, we can also set up a personal demo to fine-tune our presentation to suit your needs and the ETFs you're using on a daily basis.
Oh, wait, Paul, it looks like we actually had one more question. So for swap-based ETFs, will the portfolio holdings reflect the actual swaps, or will it show the exposure?
Those would actually show the actual holdings of the portfolio.
Awesome. All right. So again, just want to reiterate that we have our sales team contact you if you do have any questions, but please feel free to call us.
Thank you very much. Everyone have a wonderful day.